Can you please confirm if the audio and the video is clear to everyone? Come on, guys. Is the audio and the video clear to everyone? Thanks, Sumida, Mehak, yes, Hiral, Nishan, Lakshmi Narayan, yes, Niraja. Thank you, all of you. Thanks, all of you. So, first of all, welcome to the ACCA FR classes. Before we start the class, a brief introduction about myself. Myself, CA Vishal Jain. I'm a chartered accountant and also a ACCA qualified for the papers which I teach. Definitely, before starting the lectures, we will have an introduction about the paper as well for the financial reporting paper. But before that, I want to have understand from all of you that now, because when we take up the classes for FR, we see students coming from the graduation background, we see students coming from the CA inter background, or might be CA final background, or we see students coming from the MBA background, or different backgrounds. So, just want to understand from all of you which background you belong to. Come on, guys, all of you. Okay, yes, it's from MBA. Okay, BCom with ACCA, BCom. So most of the students I understand so far is from BCom background. Okay. Wonderful. Wonderful, guys. Now, thanks all of you. Okay. So now about the classes. So the classes will happen on every Saturday and Sunday from 9 a.m. to 12 in the noon. So this is the timing of the classes, and definitely we will require some extra classes also. Not as of now, but yes, towards the end of the syllabus, we'll see some extra classes coming up for which we'll announce in advance. No worries about that. Now, coming to the ACCA FR syllabus. Understand, guys, the syllabus is divided into 4 parts. Okay, this is the division that is done by the ACCA syllabus. Okay, now understand the syllabus. The parts are: first is the conceptual and the regulatory framework. So, what is the meaning of conceptual and regulatory framework? So, basically, what happens? This is a principle or a framework which governs the all standards. Okay, you can say this is the Gita or the Quran or the Bible of all the standards. Okay, whenever any professional accountant faces any challenges in any transactions, and for that transaction there is no specific accounting standard, it is then the professional accountant has to arrive at this conceptual or the regulatory framework. Okay, now part B is accounting for transactions in financial statements. So under this part, we'll study the multiple IAS or IFRS. Sir, what is IAS and IFRS? Now understand. In India, we say it as an accounting standard. Okay. In you can say in US, we say it as an US GAAP. Internationally, we say it as a IFRS, International Financial Reporting Standards, which was converged in India as Ind AS. Okay, so if we talk about Ind AS in India and IFRS internationally, mostly they are the same. Except for few differences, which are called as carve in and carve out. Now the question comes up: will we study carve in and carve out in our these lectures? No. We'll be studying only IAS and IFRS, International Accounting Standards and International Financial Reporting Standards. We'll be studying in the class. We'll not be discussing about carve in and carve out because they are specifically for India. Okay. Now, but yes, once you have studied IAS and IFRS, understanding the carve in and carve out will not be much a challenge. Now, the part C is analysis and interpretation of financial statements. What is this? So basically, under part A, I will be discussing with you the overall guideline. Under part B, I will be discussing with you each and every standards. Under part C, when the financial statements are already prepared using the framework and the IAS and IFRS, under part C, we'll study how to read the financial statements, how to analyze the financial statements, how to interpret the financial statements. It can be multiple types. It can be of multiple types. It can be, this is the financial statement of Unilever for the previous year, and this is the financial statement of Unilever for the current year, and we have to compare the financial statement of 2 years for the same company. Now, another way of comparison can be, this is the financial statements of Unilever for the current year, and this is the financial statements of P&G for the current year, and this is the financial statements of ITC for the current year. Now, the three companies in the same industry for the same year, we have to analyze these three companies. Okay, so the comparison can be of multiple types, which we have to study and then analyze the financial statements accordingly. Now, part D is preparation of financial statements for the group. Now, see, under part A, part B, part C, we studied for the single entity perspective. Okay, but now in the under part D, we are talking about, let's suppose this is a Reliance, this is a Reliance. Now, Reliance can have multiple companies within the group. Okay, so now we have to prepare how to consolidate this accounting, how to consolidate their financial statements, which is called as group accounting. Okay, so this is the 4 parts of the syllabus which we have to study in the ACCA FR syllabus. I hope that is clear to all of you. The syllabus is clear to all of you. Right? Very good. Now, for the ease of the smooth running, or you can say for the smooth running of our classes, what I have done is I will be following this structure. Okay, so this I have divided our syllabus into 6 blocks. I have divided the syllabus into 6 blocks. So the first block is non-current assets plus leases. Second block is revenue, financial instruments, provisions, events after reporting date, and taxation. The third block is preparation of financial statements. Fourth block is group accounting, then forex, then income taxes, inventories, and biological assets. Fifth block is interpretation of financial statements, and the sixth block is earning per share, reporting financial performance, cash flows, and other miscellaneous chapters, which includes the framework as well. Okay, why I'm taking a framework at the end? Understand, because once you have the overall understanding about each and every IAS or IFRS, it is then you will be in a much better position to understand the framework. Okay, like for example, if I tell you, if you study the Bible or the Gita or the Quran at the age of 2 or at the age of 4 or 5, you might not understand the actual relevance of the provisions written in that, right? But when you study the same at the age of 25 or 30, right, when you have faced some experiences in the life, it is then you will be able to understand what exactly it is trying to say. Okay, so that's the reason what I'm trying to say here is I'm taking the framework towards the end, not at the beginning. Okay, now guys, understand, definitely we have divided our syllabus into 6 blocks. The overall intent for that is to, for first one is smooth running of our classes. Second one is we will conduct a test after completion of each block. After completion of each block, we will be conducting a test with you. Now, let's suppose block 1 completed, we will take one test. Block 2 completed, we'll take a test for block 1 and block 2. Block 3 completed, we'll take a test for block 1, block 2, block 3. Okay, block 4 completed, we'll take a test for block 1, 2, 3, and 4. So it will run cumulatively. Okay, not individually, it will run cumulatively. I hope you have understood this point. And yes, the attendance in the test is mandatory for all of you with no excuses accepted. Okay, and the pass percentage in the test will be 70%. Now, after completion of all the 6 blocks, we will take one full-fledged test. Okay. Now, exam pattern. So this is our course structure. Now, the most important thing of this orientation lecture is the exam pattern. Any of you is already aware of the exam pattern for ACCFR? Any of you? Come on, tell me. If you are already aware of the FR exam pattern. Come on, guys, tell me. Okay, yes, he's already aware of it. Very good, yes. So now understand, our syllabus basically will be divided into 3 parts. Our question paper will be divided into 3 parts. Okay, section A, section B, and the section C. Okay, just give me a minute. I will. So ACCA question paper will be divided into 3 parts. Section A, Section B, Section C. Section A is of 30 marks. Section B again is of 30 marks. And Section C is of 40 marks. Now, how the question comes up, you have to understand that, okay? So, in Section A, you will get 15 questions of 2 marks each. Two marks per question. 2 marks per question. Now, what will happen here? In 2 marks question, what will be asked? They can ask either multiple choice question. They can ask either one word answer questions. Okay, it's not always MCQ. The students have a wrong notion that in Section A and Section B we get you can say MCQ questions. No, it is called as objective type questions. I will write here. It is called as objective type questions. It is called as objective type questions. Okay, so in your material also you will see this. Okay, OTQ, objective type questions. So 15 objective type questions of 2 marks each. Now, what is the meaning of this? If your answer is correct, you will get 2 marks. If your answer is wrong, you will get 0 marks. There is no one in between. There is no one in between, either 2 or 0. Clear, everyone? Either 2 or 0, no one in between. Okay, now same for Section B also. Same for Section B. It is also objective type questions. I will write here. The marks which will be awarded is either 2 or 0. No one in between. No step marking for this one. Okay. Now coming to Section B. In Section B also again 15 questions of 2 marks each. Then you must ask me, sir, what is the difference between Section A and Section B in that case? So understand. In Section B, what happens? There are 3 set of questions. Okay, I will write like this: case 1, case 2, and case 3. So now what will happen here? It's 5 questions multiplied by 2 marks each. Again, 5 questions multiplied by 2 marks each. Now again, 5 questions multiplied by 2 marks each. Now what happens here is, these 5 questions will be linked with each other. So what is the meaning of linked with each other? Understand. Let's suppose it is asking you to calculate the value of an asset. It is asking you to calculate the value of an asset. So in the first question, out of 5 questions, in the first question, they will ask you what is the value of the asset. In the second question, they will ask you, based on the value of the asset that you calculated in question number 1, okay, calculate the depreciation of that. So basically what I'm trying to say, the answer for the second part will be linked with the answer of the first part. Okay, so they will be linked with each other, but there will be no linkage between case 1 and case 2. There will be no linkage between case 1 and case 2. Case 1, case 2, case 3 are not interdependent. They are not linked. They are not linked. But the 5 questions within case 1 or the 5 questions between case 2 and the 5 questions in case 3, they are linked. Okay, they are linked. I hope you have understood the difference between section number A and section number B. Now here again in section number A, I will write one more thing, that 15 independent questions, not linked. But here 3 independent cases. But within each case, 5 questions are linked. But one more thing, here also it is either 2 or 0. It's either 2 or 0. Either 2 or 0. Again, no step marking in section number A and section number B. I hope you have understood this point. Come on guys, tell me, is this point clear for section number A and section number B? Wonderful. Now comes section number C. In section number C, so now tell me, section number 1, how many questions? 15 questions. Section number B, how many questions? 15 questions. So 15 plus 15, 30 questions, right? Yes, Jasprit, I will be sending these notes at the end of every classes. Okay. Now, so section number A 15 questions, section number B 15 questions. So it total accumulates to 30 questions. Now, section number C will have 2 questions. Section number C will have 2 questions, that is question number 31 and question number 32. So now understand. Harshita, understand what I'm trying to say here, either 2 or 0, meaning thereby simple. If your answer is correct, you will get 2. If your answer is wrong, you will get 0. There is no step marking for that. Okay. Is it clear, Harshita? Okay. Now section number C will have 2 questions, each question of 20 marks each. This is of 20 marks. And again, this is also of 20 marks. Now, what will be asked in these questions? Let's understand that. So now, in question number 31, you might be asked to prepare. You might be asked to prepare financial statements. Now, the financial statements can be a single entity, or the financial statements can be for the group. Either this or this. Now, and question number 32 will be for interpretation of financial statements. Okay. Or here also you can write, it can also ask for cash flow. Or, so this is what can come in question number 31 and 32. I hope that is very much clear to all of you. Now, the students have a wrong notion or an understanding that interpretation of FS can be left because it can come or it cannot come. So let me tell you very upfrontly, very frankly here, that interpretation of financial statements is a question which will definitely come in the exam. Come what come may, it will definitely come in the exam. Okay, I hope that is clear to all of you. Come on guys, tell me. Okay, now, so that's what I have written here, but for the ease of understanding, I just tried to explain using this chart because it definitely eases the understanding perspective. Now, exam pattern, if you see, section A is 15 objective type questions of 2 marks each, 30 marks. All 15 objective type questions are independent of each other. Section B, 15 objective type questions of 2 marks each, again 30 marks. So it appears that it is same, but now there are 3 case studies. Each case study will have 5 objective type questions which will be interlinked, but the 3 case studies will be independent of each other. Okay, now 3 case studies multiplied by 5 objective type questions per case study that gives you 15 questions for 2 marks each is equals to 30 marks. Now, section number C, again 31 and 32. So it can be, one question will be for interpretation of financial statements. Okay, and another question will be for preparation of financial statements, might be single entity, might be group accounting, or might be cash flow statements. Okay, so this is what is the question. Okay, now. But the exam is on computer, then it is difficult to calculate on computer. Definitely, Riddhi, if you don't have hands-on experience on computer, it will be a difficulty. But don't you worry at all. I will be giving you guidance from time to time that how to use this. Okay, how to use this. But all of you have to take a promise with me today. All of you have to take a promise with me today that whatever questions you will solve from now, you will not be solving these questions on a piece of paper or using a pen, but rather you will be solving all of these questions on a system, not on a piece of paper. Is that clear to all of you? That's a promise that I will require from all of you. So what happens generally, students, what they do is they till the very moment of the exam, they practice each and everything on a piece of paper because they feel comfortable. That's what we have been doing so far, right? But the time has changed now. Okay, this is the new normal now. So what you have to do is you have to practice each and everything, or any question which you are practicing, you have to do it in the system itself. Okay, how and where I will guide you, but you have to take a promise with me that you have to do all the practice in the system, except for section A and section B, which you can do in the piece of paper also. That's not a challenge. But for section number C, you have to practice only and only on the system That's a conclusion I can say. Okay, now further, point number 4. Now understand success formula. So how will you succeed in FR? So first and foremost point is you have to attend the live classes regularly. If it is possible for you, definitely I understand for some students it might not be possible due to office commitments or some other commitments, it will not be possible for them. But if at all there is a 10% probability, also there is a 10% chance also that you can attend it. If you are having some difficulty also, but then I will recommend please attend it live. The reason is in the live classes you have the discipline, you can ask your queries instantly, okay, and you will have a motivation for the lectures. So please attend it live, that's a request, and that's you can say, and you will see the changes, you will see how you are evolving in the classes also. Okay, so that's a request that you have to attend all the lectures live. Okay, now, and that's the reason why we conduct weekend lectures, not on a weekday, because we understand that on a weekday, the candidates or the students might have office commitments, so they might not be able to attend the lectures live, and that's a whole intent of conducting these lectures on a weekend so that the students can attend it live. Okay, so please take the benefit of it and attend all the lectures live rather than attending the recording. Definitely for some or the other lectures, if you have missed for any other reason, you can definitely attend the recording of that, which will be available on your LMS portal. Okay, but don't you worry, you will get the recording for that. For each and every lecture, you will get the recording. But as far as possible, please try to attend it live. Okay, that's the only message that I want to convey to all of you. Now, after every class, revise what we have discussed in the class and what all assignments. If I have given some assignments, please solve that assignment as well. If I am taking any test, please attend that test as well. Okay, now understand guys, definitely I cannot force you guys to attend that test, but it will not be justice for you, okay, if you don't attend the test, because when you appear for the test you get to know what is the area, or which is the area where you have to work more, and which is the area which is your strength. Okay, so this is a real-time check for you guys if you appear in the test. Okay, so I will be setting the question paper, I will be evaluating your question answer sheets, so please take the optimum benefit of that. Now, so that's what I'm to say. Live lectures, revise all the classes, solve all the assignments, and appear for all the tests. That's the only success formula. That's all, nothing else you have to do. Now, class notes, workbook, practice kit. I believe you do have the workbook and the practice kit. Okay, so now I will, after completion of each class, definitely you have to revise from my notes. Additionally, you have to read that part from the workbook as well. Okay, from the workbook as well. Okay, why I'm asking you to read the workbook? Understand, when you read the workbook, definitely you will not find anything new in the workbook. Definitely you will not find anything new in the workbook, but when you read the workbook, you get the better understanding over the things. Okay, okay, might be a situation, there might be a situation when I'm explaining you things, you have understood it, but when you are reading the workbook, your understanding enhances to a next level. Okay, so that's the reason I always recommend that you guys please read the workbook at least once before, after every classes. Okay, yes, you can do it whether you are referring BPP or Kaplan, irrespective of that. That is not a challenge, but from a practice kit point of view, I will be referring BPP in my classes. Okay, you guys can follow either of them, Kaplan or BPP, not a problem at all. If you are referring Kaplan and have any queries from that also you can ask me. That is not a challenge at all. But yes, when I am taking any questions, I will be taking only from BPP. Okay, but you can ask me queries, there's not a challenge. Okay, now definitely I'll be taking few of the important questions from Kaplan as well, where I will specifically mention that this is a question I have taken from Kaplan. Okay, now if if you required, you guys can take a print of these class notes, which I'll be sharing after every lecture. I'll be sharing the class notes. So if you want, you can take a print of it, or if you want, you can write along with me in the classes as well, as you feel is fine for you. Okay. Generally, I recommend you to write along with me. Okay, but there are students who feel that taking a print is feasible for them, is fine. Choice is yours, but my recommendation, write the notes along with me in the class. I will give you sufficient time to write the notes. Okay. Now, study format should be cumulative. Sir, what is the meaning of cumulative study format? Understand. So basically what happens, let's suppose after lecture number one, okay, you have to revise lecture number one. After lecture number two, you have to revise lecture number one plus lecture number two. After lecture number three, you have to revise lecture number one plus two plus three. If you follow this approach, definitely I can guarantee that you are gonna score wonderful marks in ACCA FR exams. Okay. Now, syllabus will definitely complete around 20th of August. Okay. Though I will try to complete it before that itself by taking some extra classes, but max to max, it will be 20th of August, not later than that. Definitely. Okay, not later than that. By 20th of August, we will be completing with our syllabus. Okay, our exams is on September. Now you must be wondering, sir, how will we basically revise the syllabus if we complete the syllabus by 20th of August? To understand, in our live classes, we will not only cover the concepts, we will cover the questions. We will help you in the revision as well. So don't you worry at all. Just what you have to do is, till 20th, you have to follow what I say, and on the 20th of August, if you follow whatever I have said, you will find that you have already completed and revised the whole syllabus, not once, not twice, but 4 times. Okay, but only condition is you have to follow what I have said in the class. Okay, that's the whole intent of dividing the syllabus into 6 blocks. Okay, so please, you have to follow me whatever I've said. Okay, now guys, as we discussed a few minutes back, that definitely there are students who are from MBA background, from graduation background, from MCOM background, from CA inter or CA final background. Okay, and you would have studied multiple facets of financial accounting standards, or financial reporting as well. Okay, understand, whatever you have studied, please keep it aside now. Please keep it aside now. Okay, let's try to start from a new approach. Try to start from a new approach. Okay, let's try to start from a new approach. Okay, and we will discuss the IAS and IFRS. Definitely, due to the syllabus perspective, I will not be able to cover the carve-ins and carve-outs from an Indian perspective. Okay, but yes, I will be completing each and every IAS and IFRS and each and every perspective of the syllabus, and taking up all your queries as well. Okay, and yes, the whole intent of taking these live lectures is you have to be proactive in the class. You are facing any query, you are having any queries, you have to write in the comment box without any hesitation. No one is going to judge you in this class. You are the king. You are the king. Each one of you are the king. Okay, or queen. Okay, you are that. Okay, so without any hesitation, without any fear, ask all of the questions which you have in the mind. Okay, so that after the class, the mind should be in a relaxed mode, that yes, I have understood each and everything. Okay, is that clear to all of you? Come on guys, tell me. Monica, basically hard copy of workbook is not required. If you have the ebook, it's totally fine. Okay, it's totally fine. Till the time you can manage with ebook, it's fine. Okay, it's just about the perspective. There are students who cannot manage with ebook, so that is a challenge. But if you can manage with ebook, it's totally fine. Okay, is that clear to all of you? That's all I have to say from orientation of FR perspective. If any one of you have any queries or any understanding or any challenges in understanding the syllabus of the FR, you can please discuss that with me now. Yes, yes, totally agree with you. It will be checked by the computer itself, not AI, but computer. That you can discuss with in the group with the admin team. Okay. Definitely, yes, it will be mandatory to show all the workings, but not for section A and for section B. No workings are required. For section A and section B, no workings are required. Only you have to write one word answer, nothing else, nothing else. Okay. For section C, you have to show all the workings. Okay. I will write it here also. I will write it here also. Okay. For section A and section B, no workings needed. For section C, workings are very important, without which you will not get the marks even. Okay, so that's what. Now tell me, is it clear, everyone? Is it clear, everyone? Anyone having any other queries in the orientation of ACCFR? Yes, Asuriya, definitely. Definitely, you have to complete all the 3 sections in the 3 hours. 100 marks, 3 hours. Like SRK says, 70 minutes है आपके पास. So now 180 minutes है आपके पास FR के लिए. Okay. So that's all about the orientation, guys. You are a CA Inter background, so I'm a little bit confident that I can do well, but only drawback is that we have to do exam online. That's what I'm feeling. No, Riddhi, you need not worry about that. Need not worry at all about that. Okay, that is my responsibility to help you in that. Okay, so don't worry at all about it. Okay, just what you have to do, all of you, one simple rule that I will tell you: please follow whatever I say. Please, okay, trust your faculty, trust me. Definitely, definitely you will be in a right path. Okay. Now, let's start the syllabus chapters. So we will start with block 1. So now if you can see, just give me a minute. So we'll start with first chapter, that is non-current assets, non-current tangible assets. Okay. Now this is part of block 1. If you can see in the orientation, non-current assets, right? Non-current assets. Now this is a part of okay, Uma has a query. Pass is 50 or 70. In the exam, in the ACCA exam, it is 50. But in my tests, it is 70. I hope that is clear. Okay. In the exam, definitely it will be 50 only. Okay. Now, so let's start with a non-current tangible assets. Now, forget everything. Forget everything. Okay. Just try to focus on what I'm saying. Just try to focus. Okay. Give me a minute. Now, understand. When I'm talking about, when I will ask some questions now, think of a balance sheet in the mind. Okay. Balance sheet. Okay. Now, assets are of 2 types. Assets are of 2 types. Tell me what are the 2 types of assets? Tell me what are the 2 types of assets. Tell me. Okay, you are telling tangible current. So basically understand. First, I will write here non-current asset. And the second type of asset is current asset. Now here I'm not discussing about current asset. So this is not my point of discussion. Okay, so cross. My point of discussion is non-current asset. Now, non-current asset are also of multiple types. Let me discuss that with you. They are tangible, they are intangible, and they are financial. Okay, tangible asset, intangible assets, and financial assets. Now, what is the example of a financial asset? Example of financial asset can be, you can say, investment in equity shares of another company. Okay, Investment in equity shares of another company is, you can say, financial asset. Okay, financial asset. Now, loans given is a financial asset. You have given the loan, you have given a loan. Okay, that's an asset, but it is financial, so it is a financial asset. So again, financial asset is also not my point of discussion, so I'm crossing it off. Okay. Now, so the only point of discussion here is tangible non-current asset and intangible non-current asset. Okay. Now, again, tangible non-current asset again is of two types. It is called as property, plant and equipment, and another is investment property. Now understand, guys, all of you. So first have a look at this chart. Have a look at this chart. Okay. Now understand what we are saying. The assets are of two types: non-current and current. The non-current are of again two types: tangible non-current assets, intangible non-current assets, and financial assets. Now, tangible non-current assets, tangible non-current assets are of two types: property, plant and equipment, and investment property, which you guys would have said it as a fixed assets, right? The name of this tangible assets, tangible and intangible assets or non-current assets, you say generally it is fixed assets, right? Tell me yes or no. We studied in the earlier classes, it is called as fixed assets, but the name, please remove the term fixed assets from your mind. Now install these words, tangible, intangible and financial. Now for the time being, remove financial, because we will study, if there is a separate standard or a separate chapter on the financial assets, which we'll discuss later on, not now. Okay, but we'll discuss, but not now. Okay, so now my point of discussion only is tangible and intangible non-current assets, which we used to say earlier as fixed assets. Now, tangible non-current assets are divided to again two parts: property, plant and equipment, and investment property. Before we understand what is property, plant and equipment, and investment property, I believe you guys know the meaning of tangible and intangible and know the difference between them. Tell me yes or no. All of you have to explain me the meaning between the meaning of tangible non-current assets and intangible non-current assets. Please tell me. Tangible is having physical substance. Okay, we can touch and see. Anyone else? Example for intangible is goodwill. Very good. Very good. Now tangible means, okay, fine. Now all of you answered it perfectly. So understand, tangible is something which has physical substance. Intangible is something which does not have physical substance. Like for the example, this laptop. Okay, this overall entire studio setup is a physical. It has physical substance, right? But the Zoom application over which you are taking classes does not have any physical substance, right? So that's an intangible asset. Okay, that's an intangible. Okay. Now, so that's the difference between tangible and intangible. Now, you will not see, definitely I understand that you know the meaning and the difference between tangible and intangible assets, but you might not know the meaning and the difference between property, plant and equipment, and investment property. Okay, so let me explain that part to you. Okay, so first of all, I will write here the property, plant and equipment. I will be telling in my classes from now onwards as PPE, E. Okay, and investment property I will be telling in my classes IP, investment property. I hope that is clear. The short form is clear. Now, can I start discussing these? Now, very good. So let me explain them one by one. And then we'll understand the difference also. Okay, first we'll discuss the meaning and then we'll discuss the difference between them. So first point. Guys, you can write this chart first and then we'll discuss further. Firstly, you can write this chart. And let me know once done. I've had done. I hope all of you have done. Now, wonderful, wonderful. Now understand meaning of property, plant and equipment. So it says that all properties, properties meaning what? Land and building, or land and building both. Okay. All machineries, all equipments, equipment can be computer equipments, office equipments, okay, all equipments, laptops, okay, all those things which help, in the production or supply of goods or services, which help in the production or supply of goods or services, okay, or which help in admin purposes, admin work, okay, are called as property, plant and equipment. For example, I am using this laptop to deliver the classes to you. So what happens? This is an equipment, this is an equipment, this is an equipment, okay, now which is helping me to deliver the services to you guys, and hence this laptop will be called as a property, plant and equipment for me. Clear, everyone? Clear? Now, some of you must be working in office also. Like, let's suppose some of you are doing articleship or internship in any firms, okay, in any firm. Now, let's suppose you are doing job and you have been allocated a laptop. You have been allocated a laptop, okay. Now, what happens when you are using the laptop? When you are using the laptop, okay. Now, tell me, are you delivering any services? No. So basically, what happens? You are doing your job. You are doing your job. You are doing your job. No, let me give you a proper example for this one. Understand? Let's suppose in our classes VGLD, no, just a minute. Basically, in my class, understand this way. In my classes, what happens? I have kept a, or you can say, accountant. I have kept an accountant. Okay. In my class, I am there. In my class, I am there, Vishal. Okay. Now what happens? So even I have a laptop and the accountant also have the laptop. Both of us are having a laptop. Now tell me, my laptop is used for what? Tell me, my laptop is used for what? So my laptop is used to deliver the services to students, deliver the lectures to students, right? So what happens? This laptop is helping in the supply of services. So see here, production or supply of goods or services. So again, this laptop is a property, plant and equipment. But now accountant is also using the laptop. But he is using the laptop to do the accounting of my classes. He is using the laptop to you can say, to do all the encryption things. He is using the laptop to, you can say, file all the compliance returns. Now tell me, is he delivering, supplying any services to anyone, or he is just supporting the admin work of my classes? Tell me. He is just doing the admin work of my classes, right? So even this laptop will be called as property, plant and equipment. Why? See written here, admin work. Admin work is also covered here. Okay. So that's what is called as property, plant and equipment. So now let's write the definition of property, plant and equipment and investment property, and then understand the difference between both. Okay. So the point number will be 2. You can write along with me. Meaning A is a property plant and equipment. Okay. So you can write the definition of it. PPE are non current, or you can write simple, are tangible assets. Tangible assets which are held for production or supply of goods or services or uh, administrative works or rental to others. Or rental to others. Now, having life more than 12 months. Okay, please write this definition. Then we'll start explaining it also. Now, till the time I will write the other definition. Point number B. Investment property. Okay. Investment property are land or building or both, okay, which are held for a rental to others or both. Please write these definitions and then we'll start explaining these. We'll take up all the queries, Uma. Don't worry at all. Okay. But first of all, let's discuss these. Very good point you've identified, Hers. We'll discuss on that. Once I've discussed the meaning of both, I believe most of the queries will get answered automatically. But first, write these things and then we'll start discussing. Let me know once done. Let me know once done. Diksha done. All others done. Natasha done. Abhay done. Yes done. Done. Chalo, let's discuss. So what does it say? It says that PPE are tangible assets. We already know that. I've already told that PPE are tangible assets. Why? Because PPE means what? It can be a laptop, it can be system, it can be machineries, it can be you can say office equipments, it can be you can say any land, it can be any property, it can be building, it can be anything, right? But they are tangible. They do have physical substance. They do have physical substance, right? So I believe this part is clear that they are tangible. This part is clear, right? Now PPE are tangible assets which are held for production or supply of goods or services. Now let's suppose in a manufacturing concern, like let's suppose example is Unilever. Okay, example is Unilever, or you can say ITC. Okay, all these companies. Okay, now for these companies, they have multiple types of machineries in their factories. Okay, they have multiple type of machineries in their factories to manufacture the finished goods. Now these machineries are helping in the production of goods. These machineries are helping in the production of goods, and hence they are property, plant and equipment. Now me as a service provider is having this laptop, the camera, the monitor, the iPad, the pencil, the overall entire studio setup, the lighting system, all the wire system, right? Everything. Now these setup help me in delivering the lectures to my students. So it is helping me in supply of services. So this is a property, plant and equipment for me. Okay, now the same example, my accountant is also using these assets, the you can say the laptop. So since he is using the laptop for admin purposes, and hence that laptop is also called as property, plant and equipment. Why? Because it covers the admin work also in the scope of property, plant and equipment. But now understand, it covers rental to others as well, meaning thereby if I am giving any laptop or any equipments on rental to others, if I'm giving any property, plant and equipment on rental to others, okay, that is also called as property, plant and equipment. Okay, basically if I'm giving any tangible non-current asset on rental to others, it is called as property, plant and equipment. Okay, definitely I will give you an exception to it right now, but for the time being, understand, if I'm giving any tangible non-current asset on rental to others, that is also called as you can say that is also called as this one, property, plant and equipment. I hope that is clear to all of you, right? Now coming to investment property. Now what is the meaning of investment property? Okay, but before that, this point, having a life more than 12 months, I believe that this is self-explanatory. Why? Because it is a tangible non-current asset. What is the meaning of non-current? The life of which is more than 12 months, right? Is the meaning of property, plant and equipment clear? Is the meaning of PPE clear to all of you? Is the meaning of PPE clear to all of you? Anyone having any queries in the meaning of PPE except for this rental part? Wonderful. Now coming to investment property. Now it says that, okay, tell me what is the meaning of investment? What is the meaning of investment? Come on guys, tell me what is the meaning of investment? Whenever you hear the term investment, what is the first thing that clicks your mind? Appreciation in the value, right? Appreciation in the value, right? Now, interest, no, I don't think so, Hers. It's not only the interest. Okay, now basically it means appreciation in the value, creation of the wealth. Okay, creation of the wealth. Now investment property, meaning therefore definitely my intent is not to use this property, but rather, understand, my intent is not to use this, but my intent is to earn from this without using this. Okay, earn income from this without using this. So what? So basically what happens, investment property, it is property means what? Land, building or both. So it says if your intention is to earn from the land, building or both, if your intent is to earn from this, okay, if your intent is to earn from this by investing in this. Now what is the meaning of investing? Now this studio is there, okay. Now this studio, I am using it for my own purposes for delivering the lectures. So now understand, this studio comes as a part of building. This studio comes as a part of building, right? Now this studio I am using for delivering the lectures to you guys. Okay, so now it is a property, plant and equipment for me. But now suppose I make another studio and I don't need this studio. So what happens? I give this studio on rental to someone else. Now tell me, am I using the studio now? Am I using the studio now? No, I'm not using the studio, but still I'm earning. So I am earning without using it off. That is called as investment property. But the only condition is it should be a property. Now you will understand how will I earn. I can earn from rental income, I can earn from capital appreciation, or both. Okay, but now the question that will arise here is, you must ask me, and I think someone asked me also, Hers asked me, I believe, that sir, in property plant all equipment you wrote here rental to others, here also it is property. Okay, in investment property also you are writing rental to others. It is a little bit confusing. Can you please explain this? Okay, let us explain. Understand. Point number C. Point number C. I will tell you tangible assets can be divided into two parts. Sir, I already know the tangible assets can be divided into two parts. Property, plant, equipment, and investment property. No. Tangible assets can be divided into two parts. One is land, another is building, or both. This is first type. Okay, all others. It can have anything. All others can have anything. Machineries, equipments, or you can say office equipments, laptops, computer, monitor, camera, anything. Okay, it can have anything. Now, all others. Okay, definitely, which has a life of more than 12 months. Okay, non-current. I will write here non-current tangible assets. Now, if this land, building, or both, if it is held for production or supply of goods or services, if it is held for admin works, or if it is held for rental to others. Now, similarly here also, in all others also, if it is held for production or supply of goods or services, or if it is held for admin works, or if it is held for rental to others. Now tell me. So definitely, if it is production or supply of goods or services, without any doubt, I will write here property, plant, and equipment. I will write here property, plant, and equipment. But the challenge or the question or the confusion arises when it's rental. The question arises when it's rental. Now tell me, when you give the land or building or both, now tell me, with time, the value will appreciate or the value will depreciate? Tell me. For the land, building, or both, the value will appreciate or the value will depreciate? Tell me. The value will always appreciate. Though for building, we charge depreciation due to wear and tear of the building. But if you talk from a market value perspective, it will always appreciate. It will always appreciate. Okay, so what happens, it is said as, when it is given on rental to others, the property, it is called as investment property. Now comes to all others. Tell me, when you give this on rental to others, let's suppose I have given my laptop on rental to other, tell me, will the value appreciate or depreciate? Will the value appreciate or depreciate? It will depreciate. Now, first, depreciate means, is it an investment? Tell me, if it depreciates, is it investment? No. Tell me, all others, is it a property? No. So is it an investment property? No. So it will be classified as property, plant, and equipment. Now see the classification and tell me, is this part clear or not? The classification of property, plant, and equipment and investment property is clear or not? Tell me. Anyone having any queries, please do let me know. Diksha and all of you who are sending me direct message to me, sincere request to all of you, please send the messages to all, not only direct message to me, because might be when you are raising some query, it might be a query for someone else also, so that will be a help to them also. Okay, so please send the queries or whatever responses you send to all. There should be no hesitation in that. Okay, definitely I'll do it, but before that, please tell me, is that clear to all of you? Anyone having any queries? First, if there are any queries, first I'll take up the query and then I'll try again sum up everything. Okay, don't worry at all about it. Come on, guys, tell me if you have any queries. No queries yet. Okay, now do one thing. Do one thing. Please read now the definition of PPE, the definition of IP. I'm giving you 2 minutes time. Please read it right now. PPE are tangible assets held for production or supply of goods, services, admin per works, rental to others. Here, so what will I write here? Except properties. On rental. Is it clear now? Because property on rental is covered as part of investment property. Is covered as part of investment property. So now, Hers, you asked me this query. So now, Hers, tell me, does this confusion end here? Okay, now having a life more than 12 months. Now, investment property means held for rental to others or capital appreciation or both. Okay, now, so what is the meaning of capital appreciation? Let's suppose I have a land. I have a land which I have not given on rental to others, but I am not using it for any of my production or supply of goods or services or any admin works also I'm not using. Okay, the land is a vacant land. So now it is land. What happens? Many investors purchase land just for the sake of investing. They don't use the land for any purpose. Just for the sake of investing, they purchase the land. So the standards suggests that the land, whenever it is vacant, it is held for capital appreciation, and hence it is an investment property. In the next class, that is tomorrow, definitely we will study in detail about the investment property, the accounting treatment, the measurement principle, the recognition principle, everything about the investment property. But understand, the only thing here is if any property is held for rental or capital appreciation or both, then it is called as investment property. Just to give you a simple crux of it, of whatever we discussed so far, simple crux of it is if you have any property for a rental or capital appreciation or both, then it is an investment property, and all other tangible non-current assets are called as property, plant and equipment. This is the simple crux. So Jasprit, is it clear now? So capital appreciation means, Nikita, basically what happens, let's suppose I purchased a land. Okay. I am not using the land for any purposes. Neither I have given the land on rental to anyone. The land is a vacant land. Just a piece of land kept there. Okay. I purchased it for, let's suppose, $1 million. I purchased for $1 million. Now what happens? With time, the value of the land will increase. It is called as capital appreciation. Okay, increase in the wealth of the investor. With the passage of time. Okay, it is called as capital appreciation. Is it clear, Nikita? Wonderful. So this is about the classification. Now, one thing, will this difference be asked in the exam? No. Then why I discussed? Because I have to discuss the chapter of property, plant and equipment. I have to discuss the chapter of investment property with you. And what happens? Generally, this query remains with the students. Sir, what is the difference between property, plant and equipment and investment property? I believe that they are both the same. So that's the reason. First of all, we have to understand things conceptually. It is then the things becomes pretty much clear to all of you. And I believe all of you have understood the difference between PPE and investment property. Okay. Though the difference between the both will not be asked in the exam. So far not asked. Might be they will ask in the future, but so far they have not asked what is the difference between PPE and investment property. But I believe that all of you should know this mandatorily, and that's the reason why I have explained it off. Okay, and I believe all of you have understood it as well. Okay, now, so now from now, what I will do is I will start my actual chapter, that is property, plant, and equipment. Okay, I will start my first chapter, that is property, plant, and equipment. So, okay, now, so chapter number 1. So I will start IAS 16. Yes, it will be asked. It is a part of your third chapter, I believe. Tangible non-current assets. In your workbook, if you can see, it is a part of the third chapter, chapter number 3, tangible non-current assets. Property, plant, and equipment. I'll explain that also. So, Lakshmi Narayan is asking, is it mandatory to mention IAS in the exam? My answer is no, 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 and no. But I will keep on writing the standard number in my classes. Okay, why? Because if at all you remember the standard numbers, it's good. Okay, but don't write in the exam. It will not be required also. It will not be required also. Okay, and don't write in the exam. But if you can recall it, it will be good after clearing your FR exam. When you go and work anywhere, it will if it will look good. But from an exam perspective, it is not required. Okay, but yes, I will write the standard number and the name for your reference purposes in the classes. Okay, so that let's suppose if anyone wants to go and read the, you can say, standard itself. Okay, then definitely they can go and read. Plus, what will happen is if you open your workbook, at every place they will give you the standard reference. They will give you the standard reference that IAS 16 this, IAS 16 that, paragraph number, all of these things. Okay, so for you to understand it in easy manner, that what exactly is that reference, I give the name of the standard in the class. But yes, from an exam perspective, not at all required. The examining team clearly mentions that even if you write the standard number correctly, I am not going to award you even a single mark for that. But yes, if you write it wrong, they can deduct marks for that. So why to play the game where you are not going to get anything if you win the game, but you might lose everything if you are going to lose the game. Okay, so why to play such games? So that's the reason. Never write the channel numbers. Okay, even if comes in the objective type questions. Okay, so understand, in the objective time they will in the objective type questions they will not ask please tell the name of the standard. Definitely not ask. Definitely they will not ask. Okay, the worst they can do is please write the treatment as per this standard number. So now if they are writing the standard number, they will also write the name of the standard. Okay, so that will not be a challenge. That will not be a challenge. Okay, now understand, whenever we study any standard, we have to study 3 things. Always we have to study 3 things. So what we have to study for each standard? For each standard, we'll definitely study these three things: the meaning of the standard, the meaning or the objective of the standard, the recognition principle, and the measurement principle. The recognition principle and the measurement principle. That's the three things which we have to study for each of the standards. Okay, now tell me, do we know, don't you think we already know the meaning of property, plant, and equipment? Don't you think we already know the meaning of property, plant, and equipment? Right? Can all of you please tell me the meaning of property, plant, and equipment? Come on, guys. Can you please tell me the meaning of property, plant, and equipment, all of you? Quick test. Please tell me what is the meaning of property? Wow. First answer is the wonderful answer. How can you be so appropriate? Very good, Yash. Very good, Hers. Very good, Harsita. PPE are tangible, held for production or sale of goods, services, admin works, rental to others, life more than 12 months. Simple. Now, Monica, you are telling that it is PPE are intangible. On what grounds? On what grounds, Monica? PPE are intangible? Tell me, we are studying and discussing this from the last 1 hour. Non-current asset. So you mean to say PPE are intangible non-current asset, right, Monica? So is it intangible? Are PPE intangibles? What is the meaning of intangible? Tell me, Monica. What is the meaning of intangible? Which does not have any physical substance, right? Now, don't you think this laptop has any physical substance? Right? So they are tangible. Very good. Very good. Okay. So please keep the mind here. Don't see only the body is in front of the system will not make sense. Along with the body, the mind should also be present in the class. Okay. Good. Good. All of you. Wonderful answers. Now, so we already know the meaning. So first point is the meaning, which we have already discussed. So I'll not discuss it again. Meaning already discussed. Point number 2, a recognition principle. Now, what is the meaning of recognition principle? What is the meaning or what is the relevance of recognition principle? Why are we studying recognition principle? What is the relevance of it? Can anyone tell me what is the relevance? Guys, we are here to discuss, not only me delivering the lecture. So all of you have to tell me, Subham, I don't want the answer now. I just want what is the relevance of recognition principle. I don't want what is the recognition principle. That definitely I'll explain. But first of all, tell me what is the relevance of this recognition principle. Why are we studying this recognition principle? First of all, tell me. Come on, guys, tell me. The relevance is to identify what? Identify what? Helps in preparing financial statements. So that the meaning also helps in preparing financial statements. So what is the difference between meaning and the recognition principle then? To recognize in the books of account. Very good. Very good. Gufran. Okay, now. So basically what happens, the only intent to study the recognition principle is to help in identifying whether we will recognize these property, plant and equipment in the financial statements or not. I will give you an example. Okay. Last week I was having my birthday. Okay. Now in my birthday, I got this watch. Now tell me, can I record this watch as a property, plant, equipment in my books of accounts? Tell me. Why? Why I cannot record this? Why I cannot record this? So do you mean to say that gift cannot be recorded? Do you mean to say that goods cannot be recorded? Understand. Okay, now, Srilata, understand it's not for a personal use. Understand that it's for a business use. Please assume that it's for a business use. Please assume that it's for a business use. Now, tell me, assuming it is for a business use, assuming it is for a business use. Okay. Now, understand. When I got this as a gift, is there any cost involved? Tell me, is there any cost involved? Is there any cost involved? No. Okay, first of all, tell me, this watch, okay, is a tangible asset. This watch is a tangible asset. Okay, first of all, yes. Now, is it held for production or supply of goods services? No. Okay, is it rental? No. But yes, this is for admin purposes. You can say it is for admin purposes. It is for admin works. Okay, it's for admin works. So definitely this watch classifies to be a property, plant and equipment. This watch qualifies to be a property, plant and equipment. Now the question that comes up is, even if it is a property, plant and equipment, can I recognize this in the books of account or not? Can I recognize this in the books of account or not is the question. Okay, so that's what is called as a recognition principle. So recognition principle filters which property, plant and equipment to be recognized in the books of account and which property, plant and equipment cannot be recognized in the books of account. Okay. So now, so I will tell you that again, one important point here is to recognize any PPE in financial statements. First of all, it should qualify the definition of being property, plant and equipment. First of all, it should be a property, plant and equipment. Then once it qualifies to be a property, plant and equipment, it is then we have to see whether it qualifies. It should qualify a recognition principle. It is then only you can recognize any property, plant and equipment in the books of account. Okay, so first of all, understand what I'm trying to say here is the relevance of recognition principle, and the relevance here is even if it is a property, plant and equipment, it cannot be recognized in the books of account till the time it qualifies the recognition principle. I will give you one example. Now, when we travel in a flight, okay. Now, when we are taking our boarding pass, we have to declare that which good is a cabin luggage and which luggage will be went inside from the boarding pass counter itself. Okay. Now, so what happens? The luggage which we submit at the boarding pass counter, first check is which is the luggage which you want to take to the cabin luggage. Okay, first check. Now, once you qualify the, okay, this is a cabin luggage, then again at the security gate, they will assess whether this cabin luggage can be taken to the flight or not. Okay, again they check it. Okay, once it passes that check, then only that cabin luggage can be taken to the flight. So that's the same thing is happening here. Okay. First of all, you have to assess whether it is a property, plant and equipment or not. If it is a property, plant and equipment, then we have to assess, can we recognize in the financial statements or not? So to assess whether we can recognize this property, plant and equipment in the financial statements or not, we have to assess the recognition principle. We have to assess the recognition principle. Is that clear to all of you? Is that clear to all of you? Lakshmi Narayana, is it clear? Wonderful. Wonderful. Now comes the question. You will say that, sir, you have discussed a lot about recognition principle. What is recognition principle? Let's discuss that now. A recognition principle. A recognition principle. So the recognition principle is, okay, now before explaining recognition principle, tell me one thing. Tell me one thing. Let's suppose you purchased a mobile phone. Let's suppose you purchased a mobile phone. Okay, you purchased a mobile phone. But after purchasing the mobile phone, you believe that you will not be able to use this mobile phone. Or even if you are able to use this mobile phone is of no use to you. Okay, basically, or to give another example, I'll tell you. What happened is, I purchased this mouse. Okay, I purchased this mouse. I'm giving you a real life example. I'm giving you a real life example. Okay, I purchased this mouse. Okay, now what happens after purchasing this mouse? Now tell me, is it a property, plant, equipment? The life is more than 12 months. Okay, it is helping me in delivering the lectures. Okay, and it is a tangible asset. So definitely it is a property, plant, and equipment, right? It is a property, plant, and equipment, right? But now after purchasing this mouse, I find that I am not finding it a very compatible myself with this mouse. Okay, I'm finding it difficult to use this mouse. So I purchased one more touchpad. Now after I purchased a touchpad, this mouse became irrelevant for me. Now tell me, is this a property, plant, and equipment? Yes. Now, but is this mouse of any use to me? Specifically for me, is this mouse of any use to me? No. So can I recognize this mouse in my financial statements? No, I cannot. I will give you one more example. Let's suppose, Hers, you have given rupees 1,000 to your friend. Okay, Subham. Okay, Hers, you gave rupees 1,000 to your friend Subham. Okay, now what happens? You expect that Subham will definitely not return this money. Subham, no offense. Okay, just as an example I'm taking. Okay, now Subham will not return this money. Tell me, Hers, will you record this as an asset in your books? Will you record this 1,000 as an asset in your books? Tell me. Bad debts. Very good. So will there be an asset in the books of Hers? No, because it is not recoverable. So that's what the standard says. If you have any tangible non-current asset in the nature of property, plant, and equipment, recognize it as property, plant, and equipment in the financial statements if and only if it has future economic benefits. If and only if it has future economic benefits. If there are no economic benefits from the asset, even if it is a property, plant, and equipment, you cannot recognize it in the books of account. You cannot recognize that in the books of account. So the first recognition principle is future economic benefits are probable. Now I'll tell you the importance of future economic benefits. The importance of future economic benefits is so important that the standard says that at the time of recognizing the asset initially, if the asset does not have future economic benefits, definitely I cannot recognize the asset. Now understand the importance. It says that even after recognizing the asset, let's suppose at the time of recognition, there were future economic benefits and hence I recognize the asset. Now, after recognizing the asset, if at any given point of time the entity feels that there are less future economic benefits or no future economic benefits, then the entity has the right, has the power, has an obligation to reduce the value of the asset down to its future economic benefits, meaning thereby, even if I recognize the assets now, considering that yes, there are future economic benefits now, but in the future, there are no future economic benefits. Okay, then in the future, I will have to reduce the value of the asset, and this process of reduction in the value of the asset is called as impairment of asset, which is again a part of your chapter number 5. Okay, so now plus cost can be measured reliably. What is the meaning of plus? Meaning that by both condition needs to be satisfied. Both condition needs to be satisfied. Both condition needs to be satisfied. Is it clear, everyone? Come on, guys, tell me, is it clear, everyone? Okay, so future economic benefits are probable and the cost can be measured reliably. The cost can be measured reliably. Now let us take up certain examples. Okay, so this is the chart. FEB means future economic benefits. Okay, FEB means future economic benefits. Okay, now I will give you examples. I will give you examples and you have to assess it off. Okay, probable means 50% or more. Okay, or you can say more than 50%. Okay, point number 1, a laptop used for admin works. Life is 3 years. Okay, future economic benefits are probable. Cost is, it is given, it is as a gift. Now tell me, what is the classification? Classification and recognition, you both have to tell me. So basically I will write here, it should be recognized as PPE, right? Very good. It is a PPE, but it cannot be recognized. Very good, all of you. Wonderful. Second point. Now tell me, what is the classification of this? It is not a PPE, nor it is an IP. Very good. It is sort of a consumables. Third, say any equipment. Supply of services. Life is again 12, not 12 months, 3 years. Okay. Future economic benefits are not there, but it is 10,000. Now tell me, PPE but cannot be recognized. Why? Because see, it is the purpose is for PPE. The life is also 3 years, so non-current tangible asset. It is a PPE, right? Future, since future economic benefits are not there, it cannot be recognized. PPE but cannot be recognized. Now, point number 4. And now tell me, investment property. No. And this side. Now tell me, why recognizes PP? Because it is being used as a factory site. So we are using it for our own purpose, right? We are using it for the production or supply of goods or services. Why not recognized? Future economic benefits are there, cost is also there. So why not recognized? It should be recognized, right? Hers? It is a PPE to be recognized. Life of the land is always unlimited, right? Life should be is unlimited for the land. Can you say that after this period the land will get right? No, right? So the life of the land is unlimited, or might be 99 years in some cases. Okay. So but it is, you can consider it unlimited also. That's not a challenge. Okay. That's the reason why the land never gets depreciated. Is it clear now? I believe this chart would have given you a better understanding over the things. Okay. Now someone asked me a query in between. I missed it, I believe. Did I miss any queries? Come on, guys, tell me. I think there was a query which I missed. If there is such case, can you please let me know, guys? Okay, wonderful. So I believe it is clear the meaning of the. I asked the recognition concept explanation once again. So Natasha is asking, but if we purchased less than 12 months, hers, if we purchase a land for less than 12 months, definitely it will not be a tangible non-current asset. Okay, it will not be a non-current asset. So we are not discussing that. Okay, now, okay. If it is unlimited, then definitely we assume that it is more than 12 months. Okay. Now, Natasha is asking recognition concept explanation again. Natasha, can you please tell me which part do you have query? Because I have explained each and everything in detail now. So if you can tell me specifically which part you have query, I can discuss that part. Because from the last 1 hour itself, we are discussing the whole recognition concept. Awaiting a response, Natasha. Please tell me which part specifically do you have any query? Or what I can do for you is I can quickly summarize the topic, okay, so that you can understand it again. But a sincere request to all of you that please listen carefully when I'm explaining any concept to you. Please listen carefully when I'm explaining any concept to you, because it becomes really difficult for me to explain the whole thing again, right? So that's a sincere request. If you face any queries, you can let me know which part you have query. Definitely, I'll explain that part multiple times. Even if you ask me, no, it's not a challenge, but you have to tell me which part specifically. Okay, no worries. Now, recognition concept. So what I have explained in the first part here is the first part what I explained is for to recognize any property, plant and equipment in the financial statements, that should be a PPE. It should qualify as a PPE and it should qualify the recognition principle. Okay, qualify as PPE, meaning thereby it should satisfy the definition of PPE. It means what? It means it should satisfy definition of PPE, plus it should satisfy a recognition principle. Now, what is the meaning of recognition principle? What is the meaning of recognition principle? It means that future economic benefits are probable, meaning thereby, if I have any asset from asset means what? Asset means what? I will get the benefits from that. Asset means what? The term asset itself means what? That I will get a benefit from this in the future, right? If there are no benefits, they are not assets. They are not assets itself. Okay. So what we are saying that there should be economic benefits. There should be economic benefits. There should be economic benefits. Okay. Now, so first part, economic benefits. Second part is cost can be measured reliably. What is the meaning of cost can be measured reliably? Meaning thereby, if I have purchased this asset or constructed this asset or whatever is the mode of acquisition of this asset, I know at what is the cost of acquiring this asset. Let's suppose I have purchased the asset. So I know what is the purchase price. So that is the cost of acquiring an asset. Let's suppose I have got the asset constructed. So I know what is the cost of construction. That is the cost of acquiring the asset. Let's suppose I have acquired this asset in a mode of barter transaction, meaning thereby I gave this mouse and I acquired some other asset. So that asset that I acquire, what is the cost of that? That is called as the cost can be measured reliably. That you should know what is the cost that you have incurred to acquire this asset, and that should be the value of the asset. Okay. So cost can be measured reliably. Cost can be measured reliably. Okay. Now, so if these two conditions are satisfied, it is then that the PPE can be recognized in financial statements. Is it clear now, Natasha? Okay. Now, I think Uma has a query. Laptop purchased for office use and kept as stock. Okay, maybe after some time it may be used for office purpose. Can we recognize now or we start using it? Now understand. The standard says that available for use. When the asset is available for use, whether you are using it or not, doesn't matter. But if the asset is available for use, you have to recognize it off. Okay. So now this is the recognition concept. So we discussed the meaning, we discussed the recognition concept. Now the third point which we have to study and which is the major part of this chapter. Now understand. I totally understand whether this asset is available for use, whether I'm using it or not doesn't matter. But tell me, does this give me future economic benefits? Does this give me future economic benefits? No, that's the reason why I'm not recognizing it off. Clear, Dakshish? Does this answer your query? But if we start using after 1 month, now understand, generally if what happens, if I believe that it doesn't give me any economic benefits, I will tell you what happens practically. If I believe that it doesn't give me economic benefits, what will I do? I will generally try to sell it off. I will try to sell it off. Okay, now when I sell, what see, initially when I purchase a mouse, definitely I would have recognized in my books of account, right? When I purchased this mouse initially, definitely I would have recognized this in the books of account, right? So now but when I understood that, okay, I don't need this mouse. So what I would have done, I would have generally sold it off and recognized the value and de-recognize my finance from my financial statements. Okay. So that's how generally it happens in the practical world. Okay. Or if I believe that, okay, this mouse is of no use for me, I might impair the asset. I might impair the mouse. So this is point number 2. Now coming to point number 3 is a measurement principle. Is measurement principle. Now, what is the meaning of measurement principle? What is the meaning of measurement principle? What is the meaning of measurement principle? Understand, guys. So basically, it says that in the first 2 steps, we understood whether it is a PPE or not, whether I should recognize in the books of account or not. Now, once we come to a conclusion that yes, this PPE should be recognized in the books of account, then comes the question, at what value? So let me write that point. Okay, as part of point number 1 and 2, if we arrive, please write it along with me. If we arrive at a conclusion that PPE should be recognized in financial statements, then comes the question, at what amount? At what amount is the question. Okay, but before that, before I start explaining all of these things, can you please tell me whether you have written everything, whatever we have discussed? Did you write everything, whatever we have discussed so far? If you have not, please, I'm giving you 5 minutes, 2 minutes time. Please write it off. Those who have not written, please write it off. Those who are writing, do let me know once done. Is it done, guys? Wonderful. So what we have to understand here is the measurement principle is again divided into two parts. Initial measurement and is subsequent measurement. Okay. Now the answer to this question, that at what amount, is answered here in initial measurement. Is answered here in initial measurement. And if I have to answer in one word, if I have to answer in one word, at its cost. At its cost. Now, if I have to discuss about the subsequent measurement, subsequently how it can be measured, the answer is either at cost model or at revaluation model. Either at cost model or at revaluation model. So this is the measurement principle, and this is what we have to study for the rest part of the lecture. Okay, so please write it off, and then now we'll take a break of 10 minutes, and after that we'll resume back. Okay. So first of all, please write it off till here. First of all, please write it off till here. So after the break, we'll study what is the meaning of cost. Okay. Then what are the components of cost? What are the inclusions and exclusions to be given in the cost? Okay. And then what is the subsequent measurement? Okay. What is the treatment and the cost model? What is the treatment and revaluation model? And then we'll complete our standard for IAS 16. Probably today, I am planning to complete your standard of IAS 16. Okay, now so that once I have completed the standard of IS 16, you will have to read the entire IS 16 from your workbook and solve the questions pertaining to that. Okay, now so let's take a break of 10 minutes. It's 10:49 now. We'll resume back at 11. Okay. Let's resume back, guys. Okay. Now, as the next part, as the next point, we have to study the meaning of cost. See, we understood that once the asset qualifies to be a property, plant, and equipment, and it qualifies the recognition principle, we have to recognize that property, plant, and equipment in the financial statements, right? Guys, my voice is clear, right? I am audible, right? Can you please confirm? Okay, fair enough. Thank you. Thank you, guys. Thank you, all of you. Now, so we have to recognize the property, plant, and equipment in the books of account in the financial statements. Now, the question comes up is at what amount? At what amount? So the answer for that is at its cost. At the time of initial recognition, we have to measure the asset at its cost. Yes, subsequently, we can measure the asset under cost model or revaluation model. Definitely, we'll discuss that part as well. But what I'm trying to say here, is at the time of initial recognition or measurement, we will measure the asset at its cost. Okay. Now, the question that comes up now is what is the meaning of cost? What are the components of cost? Okay. So let's discuss that part. Point number 4. Okay, components of cost. Components of cost. So standard says that cost includes purchase price. Okay, now plus any non-refundable taxes, okay, or duties. Okay, now plus you can say plus, or you can say minus, not plus, you can say minus any trade discounts or rebates. Okay, then plus any directly attributable costs incurred to bring the asset to a location or condition intended by management, plus any finance costs which is allowed to be capitalized, I believe you know the meaning of capitalization or capitalized. All of you know it. If there is anyone who doesn't know the meaning of capitalization, please tell me. So basically what happens whenever the entity incurs any expenditure, it can either go to a P&L or it can get capitalized with the asset. So now what happens when the entity takes any loan, that the loan will definitely have borrowing costs. Now that borrowing cost can be transferred to the P&L, but if that loan has been taken for the construction of an asset, so in that case, and if certain conditions are fulfilled, then that borrowing cost can be capitalized as part of the cost of the asset. Okay, so now finance cost allowed to be capitalized under IAS 23. Mostly I will discuss IS 23 with you in the next class, that is tomorrow. But yes, this is what it is. This is what it is. Okay. Now, this is the meaning of the components of cost, but there are certain inclusions and exclusions which I will discuss with you. But first of all, you write this one. First of all, you write this one, and then we'll discuss the everything in detail. The components of cost. Please write it off. Capitalized as can be considered as reserved. No, Jasprit. Capitalized means added to the cost of the asset, goes to the balance sheet. Capitalized means forms part of the balance sheet. Yes, it historic cost means is a cost model, but we'll discuss about it in detail. Don't worry at all. Whether the entity follows cost model or revaluation model, irrespective of that, at the date of initial measurement, that is on the date of purchase, it should be measured at cost only. Okay. Now, advertisement, initial location expenses, then expenses. Now I have to discuss with you which for testing costs. I have to discuss with you testing costs, Then I have to discuss with you employee benefit expenses. I have to discuss with you cost of staff training. Okay. Then I have to discuss with you decommissioning and restoration and removal costs. Then I have to discuss with you advertising expenses. So the ones that I've highlighted that I have to discuss with you in detail, rest definitely I'll discuss, but yes, these are the specific points that I have to discuss with you. So now what you can do is please write it off and then I'll start discussing it one by one. So testing cost is coming here, testing cost is coming here, staff cost is coming here, staff cost is coming here. So these two are linked. So we have to discuss what is the exact meaning of that. Okay. So that's what we'll discuss. Now advertising cost is one separate line item and decommissioning, restoration or removal cost is one separate line item that we have to discuss with you. But do let me know once you're done writing, then we'll start discussing these points. Okay. Now, let's discuss it off. First, coming from here, components of cost. So now standard says that, okay, fine. Completed first, yes. Is it done? Yes. Okay, fine. Let's start it. So, what we were discussing here is basically it says that as part of initial measurement, irrespective of whether, understand, generally the students have this confusion that, sir, if the asset is under revaluation model, if the asset is under revaluation model, then on the date of purchase, I will measure it at fair value, right? But understand, what is the meaning of fair value? Tell me, what is the meaning of fair value? Tell me. At the what is the price at which you can purchase this asset now, or we can say you can sell this asset now, right? What is the price of this asset today, right? Current value of the asset. Very good, very good. Current market value of the asset. Now, if you have purchased the asset today, definitely you would have purchased at its market value itself, right? So the current value is the cost, current value is the market value. So on the date of purchase, the cost is equals to the fair value. Again, I'm repeating, on the date of purchase, the cost equals to the fair value. There is no difference between cost and fair value on the date of purchase. Clear, everyone? On the date of purchase, there is no difference between them. There is no difference at all between them. Okay, now so basically it says on the date of measurement, on the date of purchase, that is initial measurement. See here, I've done initial measurement. We have to measure it at cost only, irrespective of whether we are following cost model or revaluation model. It should be measured at cost only. Okay, now so there comes a question: what is the meaning of cost? What is the meaning of cost? So cost can be purchase price. What is the price that you have paid to purchase the asset? Okay, now the price will include any non-refundable taxes or any import duties which you have paid or any custom duties which you have paid. Okay, which is not refundable. What is the meaning of refundable and not refundable? I will give you an example. Let's suppose I wanted to purchase this laptop and the price of this laptop was INR 2.5 lakhs. The price of this laptop was INR 2.5 lakhs. Now what happened when I wanted, what is my calculator? Now, this 2.5 lakh is inclusive of GST of 18%, is inclusive of GST of 18%, right? So what is the price exclusive of GST? 2.5 lakhs divided by 1.18. So the price of this laptop is 2,12,000, 212,000, and the 18 GST is how much? 38,000, right? 38,000 is the GST. 38,000 is GST. Now understand. So if as a business person, I can get the credit of that GST, what is the price of this laptop? For me, the price is only 2,12,000. For me, the price of this laptop is only 2,12,000. Okay. But if for a normal person, he cannot get the credit of GST. Okay. The credit can be given only to the business person if that asset is used for business purposes. Okay. Now, if for a normal person, who cannot get the credit of GST, what is the price of the laptop? 2,50,000. Okay. So basically, that's what is the meaning of non-refundable taxes. Okay. For me, it is refundable. For most of you, it will not. It will be non-refundable. For most of you, it will be non-refundable. So the price will be different accordingly. The price to be capitalized will be different accordingly. I hope it is clear to everyone. Okay. Now, so this is the meaning of price plus non-refundable upfront taxes. Price plus non-refundable upfront taxes. Okay. Now, minus any trade discounts or rebates. If there are any trade discounts or rebates which we have to adjust, you are not required to adjust cash discount. You are required to adjust only trade discounts or rebates. I believe you know the meaning and the difference between trade discount and cash discount. Cash discount is just to given to get the payment earlier. Right? For the you can say to get the payment earlier, the cash discount is given. If you are getting any cash discount from the vendor from where you are purchasing the asset, that discount need not be adjusted here in the cost price. Okay. Now, only trade discounts or rebates needs to be adjusted. Okay. Now, further, it says if you are incurring any further costs, to bring the asset in the location and the condition intended by the management, all the costs incurred till that time should be capitalized. Now, let me give you an example. Let's suppose I purchased a machinery. But the machinery was in a dismantled form. At the premises of the seller. The machinery was in the dismantled form in the premises of the seller. Now tell me, if where will I use the machinery? In my factory? Where will I use the machinery? In my factory. So to bring the dismantled machinery from the premises of the seller to my own factory, I will incur some transportation costs. This transportation cost is called as directly attributable cost incurred to bring the asset in the location intended by the management. Now tell me, can I operate the dismantled machinery? Tell me, can I operate the dismantled machinery? Guys, do you know the meaning of dismantled? Right? Basically, let's suppose if there is a machinery, it comes in parts. When you purchase it, it comes in parts. Now you have to assemble everything and fix it off. Okay, you have to assemble everything and fix it off. Okay. Like let's suppose if you purchase furniture, okay, so what will happen? They will send the tabletop separately, the legs of the table separately. Okay, then engineer will also come along with it. A carpenter or an engineer will come along with it, and he will fix it at your place. He will basically install it at your place. Okay. Now, so that's what happens. Yes, Abhay. So basically, that's what is called as handling cost or installation cost. Okay. Now, so that also gets part. So basically, it is incurred directly attributable cost incurred to bring the asset in the condition intended by the management, and that's what is written here. Any directly attributable costs incurred to bring the asset in the location and condition intended by the management, all such costs should be capitalized with the cost of the asset. I hope that is clear to all of you. Right now, any finance cost, as I was explaining right before also, that if you are taking any loan for construction of an asset, then the borrowing cost incurred on that loan should be capitalized to the cost of the asset if it is allowed by IAS 23. IAS 23 governs the borrowing cost. Okay, so that we'll study tomorrow. But yes, what you have to understand here is if there are finance costs which is eligible for capitalization under IAS 23, that should also be forming part of the cost of the asset. Okay, so this is the meaning of the cost. But now understand, generally what happens, since this paragraph Now what happens? This paragraph is an open-ended paragraph. It does not specify. It does not specify which cost to be capitalized, which cost not to be capitalized. Okay, it just says that any directly attributable cost. Now the professional accountants started misusing this paragraph. They started misusing this paragraph. Why? Because if they wanted to increase the value of the asset, they told that okay, there is some directly attributable cost which I will capitalize, and hence the value of the asset will increase. If for any reason they want to decrease the value of the asset, they will say it is not a directly attributable cost and we will not capitalize. Okay, so they started misusing this paragraph. Now again, the standard setter came up with a guidance. Okay, that which costs to be included as part of directly attributable cost and which cost to not to be included as part of directly attributable cost. Okay, now tell me, is this list an exhaustive list? Is this list an exhaustive list? No, this is not an exhaustive list. This is just an illustration to give a guidance. This list is just an illustration to give a guidance that what type of cost should be capitalized and what type of cost should not be capitalized. I hope that is clear to all of you. Now, if you see installation cost, it helps in bringing the asset in the condition intended by the management, and hence it should be capitalized. Handling cost, transportation cost, again, all these help in bringing the asset in the location and the condition intended by the management, right? Now again, site preparation cost, where you have to place your machinery, that you have to prepare the site for that. Again, that's a directly attributable cost to incurred to bring the asset in the condition intended by the management. So it should be capitalized. Now comes these three costs: employee benefit expenses, testing expenses, decommissioning or restoration expenses, which I have to discuss with you one by one. Now comes what are the costs not to be included. Then cost of staff training, I will discuss with you. Advertisement expense, I will discuss with you. Initial operating losses. Now it says that if you have purchased any machinery and for that machinery you are incurring any expenses, you are having any losses, operating losses, you are operating the asset and you are getting losses. Tell me, these operating losses, are these incurred to bring the asset in the location or condition intended by the management? Tell me, are these losses incurred to bring the machinery in the condition or location intended by the management? No, and hence this should not be capitalized. Relocation expenses, let's suppose you purchase the machinery, you brought to your location, now you want to relocate it, from factory 1 to factory 2. Tell me, will this cost be capitalized? No, it was already in your premises. But once in your premises, when you relocate, you cannot say that this relocation cost I will capitalize to the cost. No. Why? Because this relocation cost is not giving me any additional economic benefits. Understand? Link with the recognition principle. These relocation costs are not giving me any additional economic benefits. I will give you an example. Understand? Let's suppose I have a machinery. Okay, through which I produce 10 pen. I have a machinery through which I produce this pen. Now, the machinery was located in Bangalore region. Now I want to shift the machinery from Bangalore to Kolkata. Now tell me, will the economic benefits change? Tell me, will the economic benefits change? No. So economic benefits will remain constant. So if I am incurring any expenses to relocate the asset from Bangalore to Kolkata, does this expense have any economic benefits? No. So can we capitalize that? No, because it does not satisfy the recognition principle. Right? So we will expense it out to P&L. Very good. Yes, very good. Okay, now testing cost I will have to discuss. Admin and general expenses, again, since these costs are not directly attributable, and hence we cannot capitalize this cost to the cost of the asset. Capitalize these expenses to the cost of asset. Okay, we cannot. Is it clear, everyone? Till here? Come on, guys, tell me. Okay, so now we'll start discussing it one by one. Point number 4, part number A. is testing costs. What is the code color of testing cost? This color. Testing costs. Now understand. Standard says that testing can be in the nature of inspection, or it can be in the nature of market survey. Now tell me, let's suppose, analyze, let's both of them. Okay, now tell me, I purchased a machinery. Now I just want to inspect whether this machinery is operating in a good condition or not. Why? Because if I will not test, there are a high risk that some accident might happen in the factory. Right? So that's why I'm inspecting whether the machinery is in good shape or not. Is it operating properly or not? Now, for you can say for aircrafts, before they are open for public, they are inspected first. So now this inspection happens to make the asset ready for the use, and is incurred to bring the asset in the condition intended by the management. And hence the standard says that if the testing cost is in the nature of inspection, you will capitalize it, or I will write here, it will be form part of cost. It will form part of cost. But if it is for market survey, now let's suppose, I will give you example. Let's suppose Reliance Jio, okay, opens up a amusement park in Mumbai. Reliance Jio opens up an amusement park in Mumbai. I'll explain, Harsita, but first of all, let me complete this topic. Reliance Jio opens up an amusement park in Mumbai. Okay. Now the ticket, the ticket per visitor for that amusement park is, let's suppose, rupees 1000 INR 1000. Okay. But what happens as part of market survey? Reliance says that for the first week, it is free. Now tell me, is this expenses changing any of the condition of the asset? Tell me, is this expenses changing any of the condition of the asset? No. So hence this expenses, this testing cost in the nature of market survey, should not form part of cost. Okay, can't be capitalized. Very good, Riddhi. Now, answering to your question, Harsita, what is the meaning of capitalization? Okay, going back to the basics, understand, guys. Capitalization basically means you are taking the expenses which you have incurred to balance it. Why? Because you believe that the expenses which you have incurred, you will get the benefit of those expenses over multiple years. So you capitalize the amount in the balance sheet and then depreciate over the life. I will give you this example. Let's suppose you purchased okay, this book. I purchased this book. Okay, this is FR book. And I know that every year ACCA changes the syllabus. So now this book will be useful for me only for the next 1 year. This book will be useful to me only for the next 1 year. Right? This book will be useful to me only for the next 1 year. So what happens? I will get the benefit from this book for the next 1 year only. So what is it? This should be expensed off to P&L. Okay, but now I purchased a laptop. I know that I will get the benefits of this laptop over 5 years. At least for the next 5 years, I will get the benefits of this laptop. So what happens? I capitalize this laptop, okay, and depreciate over 5 years, and depreciate over 5 years. So that's the difference between capitalization and expense of. Is it clear, Harshita? Is it clear? Again, I will explain this with the help of one more example, but towards the end of the lecture. But first of all, let me complete these points, and then I will take up an example and then explain it off, okay, further. But this is the point of testing costs. Now, further in the testing cost, I would like to add one more point, which is an amendment, not in this year, in the previous year it was an amendment. So the amendment says that if free sample given to check demand of the product, then okay, fine. Now tell me what happens. Is it, don't you think that is the nature of market survey, Subham? Don't you think that is the nature of market survey? And that is more of an advertisement expense. That is not a testing expense. That is more of a advertisement expense, Subham. Right? So you have to understand the difference between testing expense and advertisement expense. Okay, definitely I will discuss advertisement expense also, but first of all, let's complete testing expense. Now, what the standard is trying to say here is, if as part of testing, there can be two things. Definitely, entity will incur testing costs, okay, which can be capitalized to the cost of the asset, which can be capitalized to cost. But now, when you are testing the asset, it might be the case, as a process of testing, that some products gets produced, okay, and these products, if sold in the market, will generate income. The question comes up, what is the treatment of this income? The standard says that this income should be taken to P&L as income. Is that clear, everyone? Come on, guys, tell me, is that clear, everyone? Okay, so this is all about testing. So we have discussed testing. Now the next point is employee benefit expense. Point number B. What is the code color of this one? Pink. Employee benefit expenses. Understand, under employee benefit expense, product part, Sumit, understand, I'll explain. So basically what I'm trying to say here is, as part of testing, might be the case that there are some products developed. Okay, I will give you an example. There is a machinery, okay, which produces biscuits. Okay. Now I just want, before installing that in the factory for use by the laborers, or the you can say laborers, yes. So what we do is, expert test that machinery, whether it is fit for use or not. So what will he do? How will he test the machinery? So he will enter all the ingredients which are required for manufacture of biscuits, right? He will enter all the ingredients and test whether the asset is operating perfectly or not, whether the biscuits are manufactured in a way it should be manufactured or not, right? So to test that the biscuits gets manufactured. So what will we do with those biscuits? Will I throw it off? Tell me, if the biscuits gets manufactured, will I throw it off? No, right? Definitely, either I will sell it as a scrap, either I will sell it as a scrap, or I will sell it at lower prices, right? Whatever it is, or I will sell it at normal price itself, might be the case, right? So standard says what should be the treatment for that? The standard says that the treatment is we have to treat that as an income in the P and L. Okay, we have to treat that as an income in the P and L. Clear? What if the income for the product is more than the cost? Still, we look at income for the product is more than its cost. Cost of what? Cost of testing or cost of you can say cost of manufacturing. What cost? Subham? Cost of testing. Is there any correlation between them? Tell me. What I've told, they are separate, irrespective. Did I tell that in this case you do this way, in this case you do that way? No. Irrespective of whatever is the situation, in more, low, whatever it is, okay, whatever it is, okay, all the testing cost should be capitalized with the cost of the asset. Any income from the products manufactured on testing of the asset should be transferred to P&L. No conditions attached. Clear, everyone? Sumedha and Subham, is it clear, everyone? Wonderful. Now, employee benefit expense. Again, there are two types of employee benefit expense that we have to discuss. Okay. If employees or laborers, okay, develop or construct the asset, or costs of giving training to employees, cost of giving training to employees, cost of giving training to employees. Okay, now these costs. Now tell me, only thing what you have to assess here is you have to see whether it is a PPE or not, and whether it should be it satisfies the recognition principle or not. Now tell me, if there are employees or the laborers who are developing or constructing the asset, okay, now the asset qualifies to be a PPE, assuming asset qualifies to be a PPE. Now tell me, the cost, the salary which we pay to the employees, the salary which we pay to the employees, will I receive the benefit only in this year or over years? Tell me. Will I receive the benefit only in this year or over years? Tell me. Sumedha, how can you see only this year? Let's suppose you want to construct a building. You want to construct a building for which you hired laborers. Now those laborers are constructing a building for you. So definitely you pay the amount of the laborers today. The question is, will this cost of labor which you gave to the laborers can be capitalized or not? So now what you have to assess? Is the amount that you pay to the laborers, will you get the benefit only in this year or over years? The building which will get constructed will give you the benefit over the life of the building, right? Which will give you the benefit over the life of the building. So standard says that in such cases, what you have to do is you have to capitalize it. Okay. But now, cost of giving staff training to employees. Now let's suppose the Reliance purchased a new machinery. Okay, and no one in the company knows how to use it. So Reliance calls of an expert so that he can give the training to the employees on how to use it. Now, the expenses incurred on giving training. Now understand. Definitely there are future economic benefits, because if the employees know how to use it, they will generate economic benefits, and I know what is the cost also. So recognition principle gets satisfied. But tell me, can I control my employees? Tell me. The day I have given the training, the next day only they can resign. The next day itself they can resign. So am I getting future economic benefits from them? Am I getting? No. So future economic benefits are there, but they are not probable. They are not probable and not within the control of the entity, and hence we cannot capitalize this. Sorry. Statement of profit or loss. Okay, so this completes our discussion on employee benefit expense also. Okay, now remaining is two: advertisement expense and decommissioning cost. So let's discuss advertisement expense. Point number C. Now tell me, if I do any advertisement, is it probable that I will get the economic benefits for certain, for sure? Tell me, is it probable? Tell me, guys, come on, all of you, tell me, is it probable that the future economic benefits will definitely flow to the entity? Okay, now, again, it says not within control of entity that future economic benefits will flow, and hence what we do is we expense off to P and L. To SPL. Is it clear? Now, coming to the last point, point number D is decommissioning, restoration, okay, or removal costs. Now, though we'll discuss about this cost in detail in one more standard, but still let me discuss it here also. Now, let's suppose, have you ever heard about something called as oil rigs? Oil rig. Tell me, guys, have you ever heard about this term called oil rig? Okay, in any movies, if you have seen, they see they show the picture of oceans, right? In the oceans, you have seen the machineries planted in the middle of the ocean or something of that sort. Can you recall that? Right, which extracts the oil from the seabed, right? So those are called oil rigs. Okay, those are called as oil rigs. Now, if you still cannot relate, do Google and see the photo. You will be able to relate it off. Okay. Now, I am taking an example and explaining this. Okay, so listen to me carefully again. Example I'm taking of oil rigs. What are oil rigs? Oil rigs are machinery which extracts oil or minerals from seabed. Okay. Now, so what happens generally? The life of oil rig is, let's suppose, 20 years. Now, what happens? Understand. So in India, the entity which deals into oil rigs majorly, that installs the oil rigs in the ocean majorly, is Reliance. Okay, Reliance Petroleum. Now what happens? Reliance, let's suppose, installs an oil rig here on this date. Okay, now This is at the end of 20 years. Now tell me, if a oil rig extracts oils from the seabed of a particular location continuously for a period of 20 years, don't you think that area will get deteriorated? That area of seabed will get deteriorated, right? So it is the government's policy, that they will allow Reliance a permission, they will give Reliance a permission to install a oil rig in the seabed if and only if Reliance agrees and Reliance commits that at the end of 20 years they will restore the place, okay, they will restore the place. Now tell me, let's suppose the oil rig cost $20 million here, okay. Now to restore the place, here Reliance assumed that here I will incur around $5 million for restoring this place, but that amount will be incurred here, not here, okay. Then the question comes up, what should be the treatment of this cost? Now answer what I'm asking, okay. Without incurring these costs, can Reliance install machinery, oil rig in the seabed? Without incurring these costs, without commitment for incurring these costs, without commitment for incurring these costs, can Reliance install machinery? No. Okay. Now, without installing these machinery, can Reliance generate future economic benefits? No. Meaning thereby, if Reliance does not give a commitment to incur these costs, Reliance won't be able to generate any future economic benefits, right? But now tell me, is this cost giving any economic benefits directly? No. But these costs enable the oil rig to generate future economic benefits, and hence these costs are called as enabler assets. Okay. And what is the treatment of enabler assets? They should be capitalized. But now the question comes up, sir, it is incurred here. You should ask me that it is incurred here. Then how will I capitalize? Fine, no worries in that. If it is incurred here, then I will calculate the present value here. And capitalize it to the cost. And this present value should be added to the cost of the asset. And what is journal entry for this present? What is journal entry for this one? The journal entry for this one is oil rig account debit to bank to provision for decommissioning, restoration, okay, and removal liabilities. Okay. Now, so this is how we have to capitalize. Why provision? Because we have not yet incurred the amount and we have just made an estimation that this is the amount which will be incurred in the future. Now, if you can recall the meaning of provision, what is the meaning of provision? When the obligation is certain, but we don't know the exact amount, but we can calculate the estimate of the amount, that is called as a provision, right? So that's what is happening here. Okay. This 5 million is just an estimation. Okay. But we are sure that we will incur amount, but how much we don't know exactly, but we can estimate it to be 5 million. This 5 million will be incurred here, and hence we are calculating the present value of that. Okay. Is that clear, everyone? Okay. So this is how we will be calculating the value of the cost. Advertisement discussed, decommissioning cost discussed. Now tell me, do you understand the meaning of the cost now? Do you understand the meaning of the cost now? Tell me, guys. Come on. Wonderful. Anyone having any queries? No. Fine. So now what I have to discuss, one point is point number 5 is the meaning of capitalization. I think Harshita asked this query, so let me discuss that point. Point number 5. Meaning of capitalization. Now understand. So what happens in the meaning of capitalization, you have to understand here that, let's suppose I got, this is 4 years, okay? 4 years. Now, so will we take provision one time by the present value of yearly basis for 20 years? Now understand, basically what we will do is we'll calculate the provision, this provision we will calculate by calculating the present value for 20 years, and then we'll unwind every year. We'll unwind every year. We'll unwind every year, and the entry for unwinding will be finance cost account debit, finance cost account debit to provision for decommissioning costs. Okay. Everything we'll discuss in this. Now we are discussing the concepts. Everything we'll discuss one by one. Okay. Don't worry at all about it. Don't worry at all about it. Okay. So in the tomorrow's class, first thing I will do is I will take up a question. Okay, 2-3 questions I will take up, giving you the understanding of how we will deal with these. Okay. So don't worry at all about it, Hers. Just focus on what I'm teaching now. Now, meaning of capitalization. Let's suppose I got this FR book. I got this FR book. Okay. Now tell me, applying one of the concept, if you know, so if you can recall, matching concept. What is the meaning of matching concept? Record the revenue and the cost in the same year. Okay. Record the revenue and the cost in the same year. Now understand. FR book, if I purchase this book and I incurred INR 3K, let's suppose I incurred an INR 3K. Okay. Now tell me, from this book, I will generate revenue in which year? From this book, I will generate revenue in which year? Tell me. Only in this year? Only in this year? Tell me yes or no. I will generate revenue only in this year. Tell me yes or no. Right. So what I will do, I will transfer this entire cost of 3K in this year itself. Okay. This is called as expense of to P&L. But now let's suppose another example. I purchased a laptop here. Now, and I incurred 250,000. Okay. I incurred this much. Now tell me, I generate revenue over what? Over 4 years. I will generate revenue from this laptop over 4 years. I will generate revenue from this laptop over 4 years. Agree? I will generate revenue from this laptop over 4 years. Okay. The life of the asset. Now, will it make sense if I'm recording a revenue over 4 years, but this entire 250K I'm recording as an expense here itself? Will it make sense? Tell me, Arshita. Will it make sense that I'm recording revenue over 4 years, but the entire cost in this year itself? No. So what I have to do? I have to record the expense also over 4 years. I have to record the expense also over 4 years. So how will I do that? How will I do that? So I will say that I will first capitalize it. I will treat it as an asset. I will transfer to balance it and depreciate it over 4 years. I will depreciate it over 4 years. So that's the meaning of capitalization and depreciation versus expense of to P&L. Is it clear, everyone, now? Is it clear, everyone, now? Harshita, does this clear your query? Dakshesh, when I will take an example, I will explain the journal entry in detail. Okay, explaining the journal entry in detail now will just make the topic complex for you. Okay, so allow me the liberty to take up the examples in the next class. Okay, for now you can only understand that I will calculate the present value and capitalize to the cost of the asset. Okay, I have not discussed the subsequent treatment so far. I have just discussed the initial measurement now, right? So what I will recommend all of you, and a request, a sincere request to all of you. Now I am wrapping up the class, but before that, please listen, all of you. After the class today itself, revise from my class notes, revise from the practice workbook also, revise from the workbook also, revise from the workbook also. Okay. Now, any queries, please make a note of it, and then we'll discuss in the next class. Okay. But please do these things. So the assignment for today is read class notes, then study workbook for topics discussed, not fully, only for topics discussed. You are not required to walk ahead of me or behind me. You have to walk along with me. Okay. You have to walk along with me. These notes will be provided right after the class in the WhatsApp group itself. Okay. No, that's just, you are not required to do that. Okay, I told no, you are not, you should not walk ahead of me. You have to walk along with me. Okay, read what is discussed. Don't read what is to be discussed. The income and related expense for using under construction PPE, that is idle vacant land, using it for car parking, should be recognized in the P&L and added as a cost of assets. Okay, this I will discuss in the next class, because this is a topic which I have to discuss subsequently. Okay, this is a topic that I will discuss. I have not yet discussed this point. I have not yet discussed this point, Subham. Is a good question, but is a part of our discussion. Okay, it's a part of our discussion. So hence I'm not discussing it right now. Okay. For advertising and training cost given, there is a less than 50% chance that there can be future, right? That is why they are not capitalized. One, there is that reason. Further, the main reason is we do not control that, right? For advertising costs, do we control? If I spent on advertisement, is it for certain, or can I control that I will get this much number of sales? No, I cannot control that, right? The main the main important point of asset is we do have the control of the asset, but in advertisement cost or training cost given to the staff, we don't control those costs, right? So that's the reason why we do not capitalize it off. Is it clear, Gufran? Okay, wonderful. So that's all for the day, guys. I hope you enjoyed the class. Thank you. Bye bye.